So I'm sitting at a property we currently have for sale. This property, if you bought 4 years ago, would have appreciated more than 25% by now. Not only that, it would also cash flow you over $1,000 every single month after paying every single expense, after paying your property tax, insurance, maintenance, whatsoever. In fact, we have a for sale sign right in the front, which will soon be turned into sold because my clients have decided to let this property go. All for some good reasons. Let me tell you why. If I go on the street right now and ask 10 people if they want a free $1,000 coming in their bank account every single month, no one will practically say no. But not realizing enough, we all have the choice to make extra cash, get some cash flow in our pockets every month, yet we decide not to do it. Now, eventually, we all will get into the habit of investing. Just not right now. The average age of a home buyer in Canada is currently 40 years, which means something magical happens at the age of 40 where people decide to start investing. The risk doesn't really change. So doesn't the reward. The reward is the same whether you're investing as a 20-year-old or a 40-year-old. But for some reason, people are more willing to invest in their 40s. Why is that? Well, there could be few different reasons. Number one, financial stability. You see, over the age, over the time, we have more financial stability. We have more of a savings. We have more of an appetite to take risk. And we have overall better knowledge around us. You've gone through the battles of struggling, living that 9 to 5, or trying to start a business, and eventually you run across seeing your friends, families, or everyone successful around you owning real estate. And then that sparks your mind into thinking, hey, maybe that is the way to go. Instead of reinventing the wheel, why not follow what everyone else is doing? The only difference is we don't think about it at a younger age for so many reasons. Number one, we feel like we don't have the money, we don't have the capital, we don't have the savings. Well, what if I told you you can buy a home for as little as 5% down? That's right. So if you're looking to buy a home here in Calgary, Alberta, anywhere in Canada, you can buy your first investment property with just 5% down. Which means for a $500,000 home, you only need $25,000 of your own money. The bank will lend you 95%. So remember how we were talking about taking risk and we don't have an appetite for that being young? Well, if you really think about it, the banks are taking the risk for you. The only catch is they want you to be living at the property. But as a young individual living at your own property doesn't sound like a bad idea. It actually gives you more independence, more security, and it gives you more responsibility. So you can grow, you can live the life you want in the way you desire. Coming back to the second biggest problem, knowledge. Now, Mohit, I want to get started. I want to do this. I want to start investing, and I want to have a huge portfolio before I retire. But I just don't have the knowledge right now. I mean, I don't want to make this an advertisement, but talk to a licensed realtor like myself. I'll be more than happy to help you advance into your real estate journey. I do this on a daily basis. Thousands of clients, millions of dollars, hundreds of transactions we deal with every single day. Whether they're my personal transactions, a client of mine, learning through different sources and doing different kind of researches, if you break it all down and instead of focusing on the small little factors, just find one reputable person you can talk to. Just have a 30-minute consultation. 30-minute free consultation, sit down, meet for coffee, and watch them help you create a step-by-step plan so you can own your own investment. You might be watching this video as an 18-year-old, 20-year-old, or maybe even in your 30s. No matter what age you're at, you might not feel like for some reason you are at the level to be investing into an asset like real estate. Because obviously there's mortgages, there's bills that have to be paid, regardless your property is rented out, you're staying in it, or whatever the case scenario is. But at least talking to a professional will give you the guideline and give you a future game plan. So if you were supposed to be ready to buy an asset in 10 years from now, maybe you'll start envisioning yourself doing that in the next 3 years instead. which means you'll be 7 years ahead of yourself. You'll accumulate 7 years of appreciation, 7 years of rental income, and 7 years of experience in investing overall. My name is Mohit Dhillon, your next realtor, and I'll see you in the next one.